Hey traders, Raghee here, and in this free recap video for September the 5th, we're going to talk about what's going on with crude oil. Now, crude oil is a play that we started last Thursday. Now, this is an end of day daily time frame setup, and you know, I like to mention from time to time, I love end of day setups. I love daily time frame setups, and in fact, even though we do a lot of early morning day trading, for those of you that love to trade the Dow, S&P, NASDAQ, Russell, in the Asian session, maybe it's the Nikkei. You know, we do that kind of stuff. But, you know, I started my career off with end-of-day charts. This was before there were intraday feeds and so forth. So I remember updating my charts by hand, pen, ruler, calculator. And in some ways, I kind of reminisce about the old days. And, you know, when we have a setup like this, I love it. So let's talk about this, because this is one of those things that, two things. One, a lot of traders need to understand the risk that's involved at end of day trading, you know, and how to minimize that risk. We'll talk about that as well. And two, what the setup was here. It is actually here because it's still an open trade. So first of all, let's talk about the risk. And this risk is defined by the volatility, and the volatility is quantified by price movement. So I talk about this exits first mentality. An exits first mentality is about knowing where your exit is while or even before you know your entry. And it might seem like an unusual thing, but it's actually something that's mandatory, I think, to successful trading. You know where your targets and your stop loss is before your entry, because in many ways, your entry should come last. And that's the exact opposite of what most traders do. So I know that when I look at the crude oil market, it's a choppy market right now. And if we take a look at the way in which crude moves on an end of day basis, take a look. It's nothing for crude day to day to move anywhere from $1.20 to $2. That is going to be a big part of what dictates not only your expectations for profit, your reward, where your target's eventually going to be, but also your risk. You know, a lot of traders will mandate that an end of day chart, you know, be very, very, very low risk, to the point where they're not respecting what the typical price movement ranges are for the end of day chart, the daily chart that they're trading. And then they wonder why they're constantly stopped out. The market tags their stop and goes on without them. It's because they smothered their trades. So if an exits first mentality means we understand volatility, and volatility is basically measured like a measuring stick using information like this, that's where I understand that my risk and reward tolerance really oftentimes are like a scale. They've got to be balanced. So if that risk is too great, let's go back to the chart of crude. So some traders might say, Rog, I don't want to be in a situation where I might be risking $1.70 or $2. No problem. What we did yesterday was twofold. And actually, it wasn't just yesterday. It started last Thursday. It was twofold. We had a short back on Thursday, and then we also shorted here. And one of the things I explained was that when the hurricane was heading towards the Gulf, the market had to come back from holiday and factor in all the concern that the evacuated rigs and the potential for any kind of supply disruption as this storm ripped through the Gulf. The market had to discount that, and they sent crude oil higher. And I said, look, the storm's about to make landfall. I live in Florida. Anyone who's been trading the markets and living in Florida knows there's a rhythm to these things. So I talked about that rhythm and said, this is going to be a great time to short the market, because we're not smashing this overbought zone, which was, again, just another reason to be a little bit more confident about the short. But knowing that weather events are unpredictable, a lot of traders decided to do what? And I love this idea. They bought puts on either the USO ETF, which is the crude oil ETF, or they shorted the October contract of this market, the crude oil market. So you could buy puts on USO, you could buy puts on the CLV, and a lot of traders chose to buy the puts. We picked up these puts anywhere as inexpensively as $1,200 to about $1,400 or $1,500 based on timing. Timing matters a lot. And today, you take a look at these puts. They're down. Well, they're down as the market's down. We're looking at a $2,500 option. 71 calls at the money. This is what we like to do. You know what? So if you shorted the crude oil market from 71, very nice trade sitting at 68 and change. If you bought the puts at 71, again, very nice trade sitting down here at 68. And that's the idea behind understanding volatility. And with that in mind, I want to remind everybody that tomorrow, the 6th, I've been just so amped up for this talk because a lot of you know, if you're already members of Simpler Futures, you already know that this is just a huge part of what I do, time and volatility. And I've actually never dove into this as the number one sole focus, time and volatility. It's always been a part of what we talk about. We might talk about price, right? But now we're kind of saying, all right, you guys know what I do with price. You know what I do with charts and chart patterns. But now we're going to talk about price movement. Now we're going to talk about volatility. And that really opens up a whole set of strategies that are ideal for day traders. And for the first time, I'm going to be talking about options, how I trade options with this kind of third grade math approach that I'm going to be walking y'all through. So join me tomorrow, 7 o'clock. I am so excited to be presenting this. I've been drinking a lot of coffee. I'm so excited. I can hardly wait. I literally am just jumping out of my skin, stoked for this. So again, I will see you all tomorrow. We'll be drinking decaf, so don't worry. I'll be going through this information nice and steady so you can see what it is that we're doing with this information. But I'm super excited for y'all to be there. I'll see you in the next update.